Hi everyone, hope you're all doing well, and today we're going to talk about 10 stocks to buy on the dip. Now yesterday, well in general the last few weeks, a lot of these small market cap companies, medium-sized market cap companies are back out of favour again, and they're kind of showing some good buying opportunities out there. Whereas a lot of the big market cap companies, if you look at the S&P, if you look at the Dow, the indexes are still performing quite well in near 52-week highs, and you look at your stocks like Microsoft, for example. Microsoft, new 52-week highs. But if you look at a lot of the smaller market cap companies, a lot of them are getting beaten down once again. And once again, this is kind of giving us another buying opportunity to go buy some stocks. And I'm going to go through them stocks with you today, as well as UK stocks. There's some UK stocks on this list because the UK stocks are selling off as well. I don't know exactly what's the cause of the UK stocks selling off. In particular, it seems a lot more that kind of seems like a bit of a slowdown now, and bit of worries about the amount of cases that are kind of creeping up, I guess, and just a few things like that. So we're going to cover that all today. And yeah, sorry there was no video yesterday. I just got a bit busy. At the moment, work's a bit crazy. The CV, just had to remember that code name there. Don't want to get demonetized. The CV situation is getting quite bad again at work, so there's a lot of staff off, meaning that I'm doing quite a bit of covering. Basically means I'm out of the house at like 7 a.m, get back in at 5, and on Thursdays I actually tend to play football, so I'm literally home for an hour, back out again, and don't get back in till like 10 o'clock. And when I got back in, I actually made this video here, which was a 40-minute video on Patreon. Talk about the stocks in general, and went into a little bit more detail than what I will today. So if you do want to see that video, links to Patreons in the description. Join through there, you get to see exclusive videos like this that we do on there. And yeah, there's over 650 members on there now, which is really good. I believe it is the highest subscribers that convert to Patreon on YouTube, which is something I'm really proud of. So yeah, if you do want to join that, links in the description. And if you do want to start investing, some links to some brokers in the description, like Free Trade. You join through there, you get a free share as well. But anyway, let's not waste any more time. Let's take a look at some of these stocks that are dipping at the moment. Like I say, there's a mix of UK companies and some US companies in there. There's only one stock that I don't own on this list, which is the first one, which is Asos. So Asos had a really rough day yesterday. I'm thinking about maybe making its own little video. Came out with earnings took it down about 18%. I believe today, as recording this video, it has just slightly recovered, but it is dropping back a little bit. So it might be one of those. I have a feeling with Asos, if I was a betting man, this is what I say all the time in the stock market. No one knows where the stocks are going to go in the short term. As long as you're buying great companies in the long term that grow profit and revenue, the share price will go up, and they will attract investors into your company. But in the short term, anyone can. No one knows where it's going to go. If someone was able to always predict where the stock market was going to go in the short term, they'd be like the richest person ever. They'd make so much money. But we generally don't know. We don't know. And, generally, I think like what most people were thinking is that, when we got into summer, we'd see a lot of these growth stocks kind of recovering. And here we are having a little bit of a dip again. And that's what I say, people kind of always think stocks just go do in a straight line, but it doesn't do that, in between. If you zoom out, you might see that, but in between that, there'll be a lot of movements up and down, and it's part of the game, really. And if you're not willing to play that game and not appreciate what they will do in the long term, and you get caught up too much in the short term, then hey, probably individual stock picking is not for you. Maybe go for indexes where there's a little bit less volatility. Same time, your returns will probably be limited. But Asos, going back to Asos. Had a bit of a dip on earnings. I think I haven't fully read it, but I saw an article that was linked on the Discord, and basically I believe they actually said that there was a bit of weakness in the sales, and one of the things they blamed it on was actually the weather. And I was like, what? I've never seen a company actually blame their sales on the weather. Like, come on, I know sometimes it can be not a great British summer, but you know what, I actually think it's been pretty good this year. My burnt face and my like Rudolph nose I'm trying to hide pretty much like on every video for the last kind of 3 weeks. You've probably seen it. Sometimes I'm like a lobster on some of these videos. I've got to disagree. I think the weather's been pretty good this year. I don't know, maybe I just haven't been noticing like it's actually been pretty bad, but I thought it was pretty good. And I thought for a company to blame their sales on poor weather, I was like, I don't know. So yeah, that had a bit of a dip. So I think there's something a little bit more going on there than what is kind of being said by Asos. Like I said, even over the course of a month, it's down 24%. From 52-week highs now, it's down 34%. So this could be a buying opportunity, but I need to go through the earnings and just assess, this kind of bad weather, what's caused it, and see what's really going on with the company, because I don't know about that myself. And then what that kind of led to is a very similar company that I own, which is Boohoo. They had the news of Asos then spooked Boohoo, and Boohoo was down like 6% on the day. And in general, it's been a bit of a choppy kind of few months really for Boohoo. And I'll be honest with you, it's probably underperforming where I want this company to be right now. I never thought going into 2021 we would kind of go back down to the below £3 range. I thought we'd kind of move on a little bit from here. And I'm not really sure what's kind of going on with Boohoo. Obviously the Asos update spooked it, but I think one thing that kind of maybe spooked it a little bit is that they were very conservative on the guidance, I guess. Maybe that was kind of, the little bit of letdown of what caused a little bit of a sell-off, I guess. But even then, it was kind of downtrending a little bit, even before the actual earnings report, I guess. So yeah, it's a bit choppy with this one at the moment. But yeah, I'm still holding it. I'm considering buying some more shares. I'm probably going to consider somewhere around maybe 260ish, maybe 240ish. If I'll be honest, if I do buy in it, I'm probably looking at this more of like what you've probably seen me do previously, where the shares that I currently hold, I'm really happy to like hold in the long term, because I do believe it'll be a £5 stock or company one day. But if I was to buy any shares, I would be buying them shares probably for like a bit of a short term play. So I'd be looking more to kind of buy some shares and probably hold that to like a £3.50 or something around there, which, as you can see, April, it touched it in April, February and January. It's already done it 3 times this year, and it's even done it previously before that. So it's a very volatile stock. I am kind of watching the situation now to see how it develops, because I think there's just a lot of negativity that keeps coming out about Boohoo, and I just feel like it's not the company's, well, I guess it is the company's fault a little bit, but sometimes the media is really like pushing it out there, and I think if Boohoo do kind of keep making a few little slip-ups and the media still keep being very harsh on Boohoo about these sort of slip-ups, then I may reconsider my position, but I'm still going to give it another kind of 6 months before I judge anything again on Boohoo. But yeah, at the moment I'm still happy where it's at, and I still believe in the company, but I am kind of looking at management now, and I think we do get a trading update in a little bit, so I'll just kind of watch it from here anyway and see what kind of goes on there. But at the moment, I'm still quite happy, and if it does go down, I will be buying some shares. Goes down a little bit more, I'll be buying a few more shares. But if I do buy shares, they're probably for more of a shorter hold, really, for this one. So yeah, that's where I'm at with Boohoo. Gang pretty much did what I thought they would do, which is only a few days ago we have the earnings report, brings it out, went up, 50, it was 21% at one point, it came back a little bit, and then boom, within a week's period, we've literally given everything back from them preliminary earnings that it brought out. And I kind of thought it would do that. I don't know why. I just kind of feel like Gang is just like disrespected. The stock price is nowhere near reflecting how the company's performing. The Gang has just brought out its 2 best earnings, its earnings in a preliminary report for Q2 in its history. This company's growing at 100%. It's going to be a lot closer to profitability than what we first thought as well. Amazing balance sheet. It's only scratching the surface, and it's really good. And I think when you consider now that it's, can we go back to its IPO? It's back at its IPO prices. I think it's absolutely crazy. And there was a point actually last year where I actually looked at Gang and I was like, are they actually going to deliver on their Q1? And then they brought Q1 out and I was like, wow, that was so impressive. And then even Q2 is better than Q1, and we're not even at peak NFL season yet. And I think I'm really happy. I'm really happy because for me now, I'm not, quite often people get caught up in what the share price is doing, and I do something I do as well. I look at the share price and go, why is it doing that? Because you look at the company and it's performing absolutely amazing. It's probably delivering at the moment, probably the best company in my portfolio, like delivering above expectations. it's doing that well. And I am looking at the share price and going, why is that doing that when the company's performing absolutely amazing? And you've got to remember, that the share price isn't the company. And as long as I hold this company and the company keeps delivering how it is doing, at some point Wall Street or other investors are going to wake up and go, oh, that gang's doing well, isn't it? Look at them. They're just about making profit. They're growing at 100% revenue rate. It's got an amazing balance sheet, massive growth sector. Why are we not buying this? Let's go buy loads of it. And eventually this is what happens with Wall Street. They wake up, they finally realise what's going on, and the money will flood in absolutely huge into this company, and it should do very well on the share price. And yeah, at the moment, at $15, I'm not going to lie, I'm loving it. I'm absolutely loving it. I want to keep buying and buying, and they're smashing it. They're smashing it. The preliminary earnings were so impressive. So yeah, Gang for me is just crazy at these sort of valuations. I don't know how long it can stay down here, put it that way. Very much similar, a very similar company, Draftkings, in the same area, but this is down at $44. I mean, one of my biggest regrets is it had a bit of a dip around here November time when it went back down to like $40, and one of my biggest regrets was not buying it then. And eventually it led me to kind of buy in this sort of range, and now it's even going back down there, and I'm like, amazing. Like, if I can just keep buying this company at $44, sitting at 17 billion market cap, for me, Draftkings is easily going to be a $100 billion company in the next 5 to 10 years. The fact that they're only in a few amount of states, the smashing earnings, add that into like the more states, moving worldwide. Even like New Jersey is still growing huge, and that's now profitable. So even though they're going to burn through the money a lot in the next few years, they can get to profitability because they've done it in New Jersey already. So while I buy Draftkings at 17 billion valuation, this for me, Draftkings, like I said previously, it's my biggest position in the portfolio. It's the first company since the likes of Square and like Shopify where I've kind of looked at a company and gone, yeah, this is the next big thing. I just know that in the next few years I'll be kind of thankful that I was buying this one quite a bit. And you know what, I actually don't mind this going down, because as long as I can keep buying more and get my average down, I'm quite happy to do that. So yeah. Next up, Gnog, same sort of industry, beaten down, $11. Basically back at its SPAC prices, and you look at what the company's done in the last year, grown revenue at a really good rate. So yeah, for me, I actually had a final decision where I'm like, out of Gang, Draftkings and Gnog, what's my order? I have to go Draftkings, Gang, and then Gnog. I will probably sell Gnog around the $20 to $25. This will probably one that I will get rid of compared to Gang and Draftkings, but at $11, I do think it's a decent opportunity here. Skills back down at 15. Now, it doesn't normally, when we look at the chart, obviously this was the only point where you're like $12, that's absolutely insane, but it normally doesn't go to, this is kind of where the lows normally at. And yeah, Skills, me and Skills have a long history, and when it kind of gets down here, my average is about I think my average is about $16 or something. So while it goes below my average, I just keep buying and get my average lower. And then what happens, and this is what happened last time, is if I can kind of find like $15, this stock from $15 went up like 45% in a month. And then you've got to assess like, is a 50% move on a company in 1 month justified? So last time I kind of bought a lot of Skills, it went up a lot, and you guys on Patreon know this, is that I actually then sold a few shares in Skills for like a good 30-40% profit, and then this is why it's always good to sometimes trim a position, especially when it moves something like what Skills did, and I made a nice profit, and now it's going down again, and I'm considering once again same sort of situation, buy some shares, get the average lower, and then if it does kind of do a Skills thing where it just pops up, which it's done, you can see, look at this little spike here, you got a little pop there, a little pop here. If it does them little pops, then even though the rest of my shares I'm holding for the long term, I can get my average lower, and then if it does have a little pop, I can just make a little bit of short-term money on it. A bit like a Boohoo situation, I guess, with that one. So yeah, I'm kind of watching that one, but I'm still a big fan of that one in the long term. Jet2, this is going down. Like, I know if you guys exited this after making some good money with the whole CV situation, I think these guys are just like a bit like what's kind of going to go on with, travel and everything at the moment. Obviously, I think it's just adjusting to thinking you're going to have summer trade, but then you're not going to have summer trade. So yeah, I mean, I am thinking about buying a few more shares. I'm just kind of thinking, realistically, when are Jet2 going to get to normality? And that's what I'm kind of thinking. Can I wait a bit before buying some shares in Jet2, or will we be kind of all going on holiday again by kind of, the October period? So yeah, I'm not sure. I'm still thinking on Jet2. I'd love to hear your thoughts on what you think about it. But yeah, I still think it's a fair bit off recovery, so I think I can be a bit patient on it, I guess. But yeah, let me know what you think on that one, actually. Corsair, a little bit choppy. It's had a bit of a bad week. It's been down about 5%. And I just really like this one. P of 19, great company with great growth. Obviously, the insiders are offloading, which will probably, the insiders are offloading, so that will probably keep the share price down a little bit until that kind of levels out. I'm not complaining. That gives me a chance to build up a good position over a good, kind of 12 months period, and then I think we might kind of kick on a little bit from there. And yeah, I think it's a good company. I'll be very interested to see the next quarter, because that'll be the first quarter over quarter of COVID kind of help. CV, I hope YouTube didn't hear that. CV numbers quarter over quarter, so I'll be very interested to see how they perform that way. But yeah, I am looking at Corsair, and same with Turtle Beach. Actually, I didn't want to put both of them on this list, but both of them, I'm kind of looking at them very close, because people think these are like only work at home, or everyone being at home, they benefit from that. But a lot of these gaming companies, they're going to still do very well over the next 5-10 years. It's huge. It's a huge hobby that so many people have, and every year you get new gamers coming in. I think these companies are here to stay for the long term. Obviously not the growth that they have done over the last 12 months, but still, 10% revenue growth companies in my opinion. Here, this company is actually moving slightly now. The kind of mergers out the way. I was saying this on the live stream last night. It's slightly moving in the right direction. So yeah, one to keep an eye on. I've kind of been thinking now. I've always said, I'm not going to buy Huya until they sort this merger out. It's terminated. I'm looking at Huya now, and I think a few people as well in the last few days. I don't want to jinx it too much, but I think a few people in the last few days have been looking at this one going, okay, here we go now. I know what's going on. Let's go back into it, especially at $15. And even myself now, I'm looking at Huya now going, here we go. The uncertainty's gone after 12 months. I don't know. We'll see what happens, but I'm just saying, I'm just going to point that out there for you guys. And next up, Card Factory. It's had a horrible couple of months, let's be honest, with Card Factory. I'm still up on my position, which is good, but yeah, it has gone down a fair bit recently. I think the last earnings kind of spooked investors that with the terms of the contract, of the loan that they had. Personally, for me, I'm not too bothered, because what I've seen from them, they're still performing very well. I still think they'll be able to raise a lot of cash, and I still want to be very careful, because it's still got a lot of high risk while it's got that awful balance sheet, and it's still very much a spec play, and I don't want to make it a big position. But when I do look at Card Factory back down here, I do kind of think, it's I think it'll still do okay. So yeah, it's one that I'm kind of watching, I'm thinking about at the moment. I'm not fully decided, but yeah, it's one that's definitely had a bit of a pullback, definitely over the last kind of few days anyway. So yeah, watching that one very, very close. We'll see what happens. But yeah, we'll see. But anyway, hope you enjoyed the video. Hope you enjoyed them little 10 stocks. Bit of a mix of UK and US stocks, I guess, as well. Hopefully it was a bit useful, spending a little bit, a minute or two on them sort of companies. As always, if you smash the like button, if you found this video helpful, if you're new and you enjoyed it, make sure you subscribe. And I will see you all on the next video, which I have no idea what it's going to be, but I will see you on the next video.